Okay, we're waiting for viewers. Get people on. Anyone? Hello, who's ever on? We had to set up a new link. The old link ended, so this is the new link, guys. So make sure you guys are on. Share the new link with everybody. Let me post it again. Hold on. Okay, guys, so let's start sharing the feed. I'm going to start in the next 5 minutes. So we got to get people on this. Oh, but share the new feed. All right, guys, so we're just waiting for more viewers to get on. We definitely need a lot more viewers for the nuggets we're going to be dropping. So start sharing the feed, guys. It's a new link. Hold on, guys. So we got more viewers coming in, guys. We're about to start. It's gonna be real good. I'm so excited, but we do need a lot more viewers in this, guys. I want this a packed house tonight because we're gonna go over things I bet you guys have never ever seen in this industry. By learning forex, I have the opportunity. Let me lower the music. So it's a party in Kim's house. All right, guys. Are back. All right, guys. So I'm so excited. We're just waiting for more viewers to get on. For those of you who are watching, you guys know this is the Forex Chicks, Melissa and I, and we definitely have a guest speaker. I'm sure you guys can see her in the back. She's her feet. Her feet, exactly. She's gonna sit right up front with us, guys. But I'm so excited to have all you guys on tonight. I know I have some special, Forex traders on here actually watching us to see how we teach and stuff like that because, they heard about, the Forex Chicks with this new movement that Melissa and I, came up with, and we decided, to launch this. So we've been just working on the Forex Chicks, and we have a lot of things we're going to be giving you guys. We're creating shirts, website. I mean, we're making shirts for you ladies, even gentlemen. Valentine's is coming around the corner. We're going to have a lot of cute little stuff we're going to be, having on our website. So this is really going to be, we're taking this trading to a whole nother level. It's not just going to be the regular trainings. We're going to really be hands-on with you guys. And I'm going to make sure that my students are going to be successful. Okay? This is not where, here, watch a video, now you're on your own. I don't believe that method because that was done to Melissa and I. So we know how that feels when you're just left out in the gutter and people come, for a good price, you can come and learn. But, with what we've given you guys now, this is our 6th video, and this is a lot of information we're giving. And we just hope you guys are really taking notes and are really applying what we've taught you in the real markets, whether you're trading on a demo, on a live account. And, I'm going to leave it to Melissa to throw, some of her nuggets with her, her view on this as well.
Well, yeah, like she said, we've given you a lot of education, and some of you may already be trading already. But definitely, like she said, you should be either trading on your demo or on your live account. And you should be practicing and applying everything that we're teaching you and constantly practicing it because you learn new things and literally, I want to say they're tools. We're giving you tools to add to your toolbox. And you need to learn to use them all together. And hopefully with everything that we've been teaching you, you've been able to plug in different strategies and different indicators and reversal patterns. And you've learned how to read a chart already. So, like she said, our goal is basically to teach this to everybody. But most importantly, we're the Forex Chicks, where we especially want to teach this to women and help them broaden their horizons And for anybody that's watching that just wants to change in lifestyle and wants to gain that time freedom and financial freedom, you know, this is definitely the way to go. This is something that we've taken and we've used,
That's
and
right.
we've gained that time and financial freedom. And it's just something that we just so passionately want to share with all of you.
That's right. And I want to give a happy birthday to a special friend that, you know, who gave me some great, you know, ideas today. I was literally on a webinar for like 5 hours with these two, you know, amazing guys. And I'm sure they're on watching. And I want to give you a happy birthday and really thank you for taking the time out of your day. Orient, you know, just helping us out. You know, a lot of people watch your webinars and you're pretty amazing. I just want to thank you for giving me the stuff that I got today, and you know, for a lot more people showing me a lot new things every day. And thank you guys for taking the time, as we're taking the time out of our days to share this with you. So I'm going to introduce our guest speaker. Some of you guys may know her. She's more like a quiet. She works, you know, through silence, and she does her own thing, you know, more low key. But she has learned so much in the market, and honestly, guys, she has taught herself the same way Melissa did. We taught ourselves mainly how to trade. You know, we had a lot of questions in the beginning, and this girl, you know, it's her first time, and she is so excited.
I'm excited.
Exactly. We're excited to have a new face on tonight. And guys, we just can't express where we're taking this Forex Chicks to a whole nother level. And you guys are gonna be seeing a lot more things that you've never been really exposed to. So stay tuned, because there's a lot more things we're gonna be giving. And I'm gonna introduce Elba Luna. Woo! Let's congratulate her, guys. All right, so you're gonna be sitting and just take it from there.
Hey guys, how are you guys? Oh, can we move this a little? Can you guys see me?
Yes,
Yes.
they could.
Can you see me up
Yeah,
here?
they could see you. And they see you right here too.
Oh, this is good. How is everybody doing? Oh my God, oh my God. It's nice to see you. Well, meet you guys all through here. Again, you know, I've been friends with these girls for a little while now. And the way I was introduced to this was through Kimberly Tori. She introduced me to the market, kind of. And I had joined a company who further educated me a little bit more about the market. I only knew that the market existed and that I could have no part of it because I didn't have the financial funds to be a part of it. And so learning, you know, more and more as we went along, I became more interested in Forex. And so I started just pretty much learning, you know, a little bit here and there. I'm a mother of 5. It's not easy. It's hard. But when you've got the time, you got to put in the time. If you've got 10 minutes, put in 10 minutes. If you have an hour, put in an hour. You know, I have a 7-year-old. I have a 10-year-old. My kids range all the way up to the age of 19. You know, and there's been times where I've kicked back. I've kicked back because I feel like life got in the way. And then I further realized life is going to always get in the way. And then you ask yourself, well, when is my time going to come? And so when I asked myself, when was my time going to come? I realized that I had to make the time. I had to steal it from wherever I could in order to further myself in the future for what I want to do, for my goals and dreams, you know? So today I want to be able to go over, probably you guys already, this is the 6th video. I'm sure you've heard this already, but I want to bring it up again because I can't stress enough how important the basics are, okay? To be a successful trader, and I am not an expert, I am not where I would love to be. I'm still learning every day. I'm putting in the time and the work every day. But there are crucial things that you need to know that you cannot forget. You know, you can't go to 6 if you didn't start at 1. You know, you can't run before crawling. So you got to remember the basics, okay? Your candlesticks. Get to know your candlesticks. Reversal patterns. Get them down packed. There's many of them. There are many reversal patterns. You know, I have flashcards. Use them. Play with friends or people to get them down. Okay? Trend lines, support and resistance. then the highs and lows. These are crucial tools that you need that'll put you on your way to become a successful trader. You know, and I'm going to discuss right now briefly. Oh, I'm sorry.
No,
I'm going to briefly, since I'm a guest here and I have a child, and I gotta go. I'm going to briefly, talk a little bit about. Oh, okay. So
the highs and lows you're gonna go.
I'm going to briefly discuss. I'm going to briefly discuss the highs and lows. Okay, I'm going to give a little tutorial, a little retouch on the highs and lows. Okay, so it was good to be on. I'm going to put you on right now with Melissa. I'll be back on in a little bit to discuss furthermore the highs and lows. Okay, all right, guys. Bye.
Woo! Guys, that was her first time, and she did pretty good. Can be nerve-wracking to do this, to be live. We're broadcasting live. We have viewers from London, from Japan, from Australia that literally are watching us. So it could be a little nerve-wracking to be in front of the camera. And we're so excited to have you. And Melissa is going to be going over the homework assignments that we gave on last Sunday, right?
Yes, I did. I gave you guys all the homework.
She's the homework lady. She's in charge of all that stuff. So if it's a lot of work, it's her fault. But you know what?
Sorry.
We do this really because we honestly care. So Melissa's going to take over from here, and I'll probably be the camera girl. Okay, guys? And answering questions. So make sure you guys have questions. And if those of you who are watching me now, wow, we have Mississippi in the house. Awesome, Anthony. If you could watch from our Forex on YouTube channel, that would be great. Melissa's going to throw down some nuggets, and these are things you guys we have not gone over really. So please stay tuned, and let's give it up to Melissa.
I need my screen share. I need my
Okay, so we're about to screen share, guys. So let's see.
You'd think by my 6th webinar, I'd at least know how to do that, right?
Oh, we have like a chat here.
I can't stand
Wait, so those YouTubers, for those of you watching us on our YouTube,
yes,
it says we have a group chat, and I just typed a message. And I think this is going to be pretty cool because if you guys have questions, you can type your questions to my far right. So guys who are my viewers that are on, can you type something so I can see if it actually working? Because it just literally let me type something to you. And if that works, that's going to be amazing because that basically means that you guys can be asking me questions, the ones that are watching me on my YouTube channel, which is pretty cool. And those of you who are watching me up here are going to definitely. We have Jamaica in the house. Wow. Woo! Look at this, Jamaica. So this is pretty cool. We have people from all around the world. And we're about to screen share Melissa's homework assignments. So
I hope you guys did your homework.
That's right.
I assign the homework, but Kim checks it.
That's right. She is a mommy. So let's see. Let's get this guys going. And and this is it, guys. So your whatever.
Africa's here.
We have Africa's here. Oh wow, Africa! Wow, that's awesome. All right, Melissa, she's gonna go over
homework. Okay.
Homework. So you went to your
We started with basically we asked you to spot reversal patterns and charts and the head and shoulders and the inverse, and that's something Kim went over homework. I'm not going to go into it in depth on the chart, okay, because you should already know what they look like and all that stuff, so I'm not going to cover them. What I am going to go into is I asked you what was the difference between a trending market and a range bound market, right? So I set up a few charts, and we're going to actually start with the trending market. Okay, and so now what a trending market means, guys.
Oh, we have Bahamas in the house.
Woo!
Bahamas!
Somewhere I need to go. Somewhere I think we should make a ladies' vacation. The Bahamas.
I think the ForexChicks are going to be visiting you too, Bahamas. Woo! And Jamaica too.
Woo! Okay, so guys, a trending market,
pay attention, guys,
is one in which the market price is generally going in one direction, right? So what we see, oh, I hate when this mouse moves, the curse of the Mac, right? Okay, so what are we on right now? We are on the USD CAD is your currency, and this is a daily chart, okay?
Daily chart,
and
guys.
The reason why I chose this chart is just because I wanted you to understand what the trending market meant, right? What is a trending market? And like I said, it generally not moves when I touch it. it's generally going in one direction, right? It's going up, right? That's what the trending market means, that it's generally going in one direction. That could be up or that could be down. I chose this one because it was going up and I like the way it looks. So this is the chart I chose, right? But
Washington, D.C., Obama. That's a good one, Ronnie.
Now, what you guys need to understand is that price may sometimes go against the trend, right? Every now and then. And what that means is that's a sign of retracement, simply. When you're looking at the long-term chart like this, a daily chart, and you're looking at such a wide spread.
Move your mouse so less of us can see.
Okay, so this is, when you're looking at just simply right here, this is a retracement. It goes down a little bit. Hold on, because I put this stupid mouse on a notepad to see if it works a little bit better in my favor. So you see how this just goes down a little bit? That's just a sign of retracement, because guess what? It comes right back up to what it's originally doing. Okay, it's originally going in an uptrend. So it retraces a little bit, but it continues to move on an uptrend. And then we know that our trends are usually noted by the higher highs, the higher lows, and a higher high and a higher low usually suggests an uptrend, whereas the lower high and the lower low is a sign of a downtrend. And Alba will cover that when she gets back on with you guys. Now, when you're using an indicator that you can use when you're doing a trending market and as well as a ranging market is the Adx indicator.
ADX, guys, right here.
And what that stands for is average directional index.
See that, guys?
Okay. And you can use, the most popularly traded currencies, the Euro USD, the GBP USD, the USD JPY, the USD CAD. These are major currency pairs that are traded. And why this is important, guys, is because these currencies tend to trend. They tend to go up and down. And that's good because that means there's liquidity, right? And liquidity equals, I always screw up this word, volatility. Am I saying it right? Volatility?
Isn't it volatility?
Yeah, volatility. Yeah, I'm saying it right.
I hope so.
I hope so, right? And what that means basically in simple terms is that there's more movement going on, and more movement gives you more opportunities. Okay, so you can see where price is going. So there's more opportunities for you to trade in a trending market as opposed to a ranging market, which we will get into, which basically kind of just bounces up and down between a support and resistance. Okay, so like I said, you guys can use this indicator, right? They say it's pretty good to use with a trending market as well as a range bound market. And I'm going to show you guys, it's super easy to insert. If you go into your MetaTrader, you just go into insert indicators.
Right here, guys.
And it's right there, average directional movement index. Okay, and that's this that you guys see down here. This is your indicator. Okay, this is your ADX indicator. And the indicator, what it does, it has values, right? You see here the numbers 0, 17, 34, 51, 69. It goes all the way up to 100. It uses the value between 0 to 100. And anything higher than the value of 25 indicates that the price is trending or that it's been already in a very strong trend. Okay, so above 25 signals a strong either downtrend or uptrend. It doesn't have, it's not particular to either an uptrend or a downtrend. A high value can signify either an uptrend or a downtrend, okay? And the ADX indicator, right? It's a lagging indicator. It's not meant to see future price. It's not meant to predict future price action. Okay? It's just and like I said, it's a non-directional indicator. It doesn't matter whether the value's high, whether it's an upturn or downtrend. It can be either or. Okay? What else you can use when you're going to set up your chart to just look at it, if it's a trending market, you can also use your SMA, your simple moving average, which we went through. And you can also use the Bollinger Band, which I don't think we've gotten into yet.
No,
okay.
That'll be next session.
right? So now let's go.
Hi, Sasha.
Let's go to your ranging market, right? This is a range. This is what I would consider. Now the mouse doesn't even want to move with me. Okay. Anyways, this is a ranging market, and like I did with the trending market, I set up the Adx indicator. Same exact thing, right? But now with the ranging market, like I said, price just bounces. This would be, I didn't set up my support and resistance, but
You want to add them?
yeah, we can.
Alba, hold the camera.
We can add the support
Just
and
add them
resistance.
right there.
I really need to learn how to use this Mac. It's driving me nuts.
Okay, so we can add the trend lines here.
Oh,
Okay.
above it.
Okay, and then we can add another trend line
Would be
right here.
below, would be down here. Yeah,
What are you even
lower.
doing there?
No,
So-
because basically this
can even
is
do one
a
right
ranging
there.
market. No, we're not showing the in betweens.
Oh,
Yeah, they're not doing
We're
channels.
just we're not
Oh,
showing
okay.
channels. We're just showing you a support and resistance. Okay, so resistance is at the top. We said support is on the bottom, right? Obvious things that we should already know. And basically, its price does not break between these. It doesn't break the resistance. It doesn't break your support, right? That's what ranging means. And like I said, you can also use the ADX indicator. And now with this one, when the price is ranging below the $25 value, right? That's what it's considered a ranging market.
Yeah, keep moving your mouse for
Okay.
the YouTubers.
That's when it's considered a ranging market. When the value of your ADX indicator is lower than 25. And the lower the volume, it just means the weaker the trend, okay? Also, you can use the Bollinger Band with this in coordination with oscillators such as your stochastic and your RSI. That's what you would use with this ADX indicator, okay, to get a better reading on your chart. That is really in depth, and I don't want to confuse you guys. We learn baby steps, right? That's how we get to suck in all this information. So now the ranging market can pretty much increase your odds to find a turning point in your market. Okay, so your ranging market, you can, it just because you can read in between the support and resistance line, you can spot more reversals and things as such, so you can get a better read of when it's gonna go on a slight uptrend or on a downtrend, right? Now, part of the homework was also asking you guys what was a retracement. Let me see which one I put it in. Okay. So now we're on the NZD JPY daily chart.
NZD JPY, guys, on the daily chart. Okay, for those of you that want to look on your charts.
So now you see price has been on an uptrend here and it just dropped down, correct? Don't let the white and the green candles confuse you guys. I just kind of like the way that it looks. I like to play around with my colors in my charts.
So we'll tell them what.
So the white candle is down. No, I'm sorry, it's up. Kind of confusing. It is. You were right. the white is going up.
It's your
buy. Yeah. Yeah, let's just change it really quick.
Alba,
So
hold
you
the
guys,
camera.
no, I got it right here.
Okay,
I don't
so-
want anybody to get confused because you know what? Even looking at it on the no, I don't want spring green. I want lime green. There we go. Oh no, I was right
Yeah.
originally. The red is down. It's a sell. The green, buy, right? Your bulls. Okay. So it's basically on an uptrend here in a consolidation kind of, but it's on an uptrend. It shoots down. That's your retracement because it stays down for a little bit. It goes back down. But guess what? It went right back up and continued to go on an uptrend. This would also be a retracement over here.
Right here. So keep
Okay.
moving
And the
your mouse.
market, you see it's going back up. The market just opened up here because we are live. But that's what a retracement signifies. Now a reversal, okay. Did I put it on another chart? I forgot what I did with this one.
No, right
Okay,
here.
right here, reversal. So you see, ooh, and here we go again. The evil mouse.
Just go. No, the red. What the red flag is. Click, click.
Click again.
There we go. Okay. So you see how the market, oh no.
Okay, so you gotta go back to the red, and then you're gonna click off the mouse so it doesn't move. Go click again, because it's not good yet until you want it. Click right there, and then click that. Okay, go. Try not to move.
Okay.
Right there.
So you see here, the market is going pretty much on a downtrend here, and then boom, shoots back up. That was your reversal, because guess what happened? And went down a little bit. You had a slight retracement, but it kept on going up. Retracement up, retracement up. It never shot all the way back down. You see, in no point or period did it shoot back down.
You want to make a support
to where the original market had been.
That's a huge
down here. You see what I mean? So it went right back up, and it stayed on an uptrend, creating higher highs and higher lows. Okay. Let's see, what else did we go? Well, obviously, you know, a reversal, just like I said here, is an
go
overall.
back to the red, and some people say they can make the candles a little bigger, so keep going all the way like that, and then just +1 right there.
There we go.
Okay.
Okay, so you see here, it went from being low previous, okay, and price shot up, and it continued to shoot up and never shot back down. That was a reversal from your downtrend. It reversed to an uptrend. Okay, does everybody clearly see that?
Look at that, guys. You see the breakout?
No, the breakout
Show them.
actually you're gonna see.
In the 1 hour.
It looks different, yeah.
So
in the
go
1
with
hour
the red candle. No, the red right here. So you can go back to original.
Oh.
Back here, going click into the way you want it, where you see it. And then you're gonna zoom one, go -1.
Yeah, that's what it was.
And then go back to the red.
Oh yeah, right here. This is a breakout candle, because I know a lot of you guys ask. You see how it has your retracements, right? You can see retracements. Up, down, was gonna push up, and then you had a breakout candle, right? And you had a sign of reversal right here. You had a sign of reversal. You could have looked at your two candles. Kim would have a trend line growing through here, and you would have gotten into the trade.
I could draw a trend line.
Probably somewhere around here.
Yep, midway.
Okay? And that's how you would trade on your breakout candle. We don't want to go too in depth, because these are things that you should already know. So what you're doing is you're adding now your trending, your reversal, and your retracement to what you already know. Okay? So now I think Alba is going to go through the higher highs and the higher lows again.
That's right, guys. Okay, so all right, guys. So this, live feeds only last 30 minutes. So when my live feed ends, I'm going to go back on. So make sure that all you viewers that are on, you're going to go back on to the second live feed. Okay? So Alba's going on now, and she's going to be going over. Let's do this. Let me get her chart ready. Okay.
Oh, sorry.
That's fine. Can you see me? Can you see me?
Yeah, they can see you.
All right, guys. So here I am. I'm back. And again, I just want to go briefly, go over the highs and the low, and how beneficial it is for you to know this, how crucial it is for you to know this, okay? What are the high and lows? Why do we use them? All right. The high and low signifies peaks, like when the market is trending up or down.
Oh, they can't see you. The YouTubers can't see you.
Oh,
so you're gonna have to use your mouse.
All right. Can you guys see my mouse? Here's my mouse.
Yeah.
When the market is trending up, or if it's trending down this way, right? If you guys notice, as it's trending up, it hits kind of like spikes. As it's going up, those spikes, those peaks, the very top of those peaks are considered the highs, and then the bottom considered the lows. Okay, you've got the higher highs and then the higher lows. When it's going up, right, you got the higher high peaking, and you got the higher lows. When it's going down, when it's trending down, okay, you got the lower highs Yeah, right.
Yeah, good.
You got the lower highs and the lower lows. Okay, so what does the higher highs and the higher lows do for us? All right, it gives you confirmation that the market is breaking out of the pre-existing trading range, right? What do I mean by that? For example, let's see here. I'm all the way up here. See what says here where it says high? Okay, here's the high right here. If you notice, it's starting to go down, right? It kind of tells you there because it reaches, this is like the high of the day, and it goes down, and then eventually it's going to make another peak, right? Probably go over here to this trend line. It might not bounce off. We'll see. And then once it bounces off here, if it does, that's considered a lower low. Okay, so what else does it do? It gives you information as to where the market is going, meaning the trend, right? It gives you that. Okay, it's a tool that you use. It gives you an indication as to when to enter a trade and when to exit a trade, right? Because if you reach a peak here, right, you're gonna see, boom, it goes down right there. You see, goes up, peak, goes down. It more or less tells you when to buy and when to sell. You know, the highs and the low in combination with knowing your trend lines and your support or resistance can give you really, really, really good confirmation as to when to have a perfect entrance and when to have a perfect exit. Okay? Did everybody get that? Did you guys understand that? So again, as I said before, I can't express enough how important it is to get your trend lines down packed. You guys can do trend lines. I mean, even at the peak, you could do a trend line going down and know when it's gonna shoot back up. You know, you can do a trend line. You can start your trend lines from days before and move it forward to the 4 hour, 1 hour. Follow where it started, where it all started from to where it's going from day one, you know, to 4 hours, to 1 hour, and work your way down. You know, get to know your candlesticks, these reversal patterns. For example, here, right here, can you see here where it says take profits, 60 pips right here? If you notice right there, there's a spinning top and a hammer right there. Indication that it's gonna go down. Get to know your candles. You got engulfing, you've got hammer, you've got spinning tops. There's so many, and they also come in pairs and bunches. So get to know your candles, get your trend lines on point, get your support and resistance on point. You know, here's another trend line right here. As you guys can see here, it's white and it's going down. If you notice right at the bottom here, it hit it, right? So you would wait for that candle to close, enter right there, and you got it all the way up, 60 pips.
Look at that, guys.
All right,
60 pips.
All right, same here. Here's a trend line right here going up. As you guys can see, it's already going down. We're gonna see if it bounces off here. If it does not bounce off and it breaks through, what are you gonna do? You're going to sell, okay? If it bounces off, what are you gonna do? You're going to buy. All right, so again, always remember the basics. Go back. Let me tell you guys, I had 2 notebooks full of information. I moved from New York to New Jersey, and I lost them. You know what I did? I started a new notebook, and I started from scratch, not where I left off. Because when you repeat things, it can never hurt you. It can never hurt you. It can only make you smarter. All right, so that's it for me. Thank you guys for being here. Nice to meet you guys, and take care. Bye-bye. Study.
All right, so Elba, you're gonna hold the camera, or this can actually go right here. You're just
sure?
gonna make sure it just doesn't fall. All right, guys, we're gonna go on my next feed. It's about to end in 10 seconds. So for those of you that are watching me right now, get back on the next Facebook Live feed. Take care, guys. All right, guys. Hello, guys. Hey, this is Kim, the Forex Chicks. So, you know, I'm going to be going over risk management, and I'm going to go over quite a few other things that I don't know how many of you guys have seen stuff like this, but I was introduced to a few new ideas on how to overview and analyze the market a lot better. All right, so just give me a second because I gotta go back live because people are, you know, making sure we are live for the Facebook. So just let me log, connecting, still connecting. And I'm going to be going over now risk management. Why I feel risk management is really important, because if you know about risk management, you will not blow your accounts, guys. Those are just straight facts, right? So that's the reality of it. And a lot of people need to have better management of their money. I mean, I've talked to all type of Forex traders. I mean, successful multi-million-dollar traders, and they all tell me the same thing. Why are they where they are today? And it's because of risk management. And the number one rule that I cannot emphasize is discipline. If you have discipline in the Forex market, I promise you guys, you're gonna get a lot further from those risk takers that do not have discipline and that break their rules all the time. I speak to people and I tell them, you girls have to hold this like this so they can see. All right, hi Sasha. Thank you for Miguel. So now, nope, gotta keep it still. I'm trying to see it. So for those of you, number one rules, please write this down. Discipline, it is imperative. Discipline, and never break your rules, okay? Stick to your rules. If you have rules, and I'll give you an example. If you go into this trade and you're watching and you're like, oh, should I get back in? Should I get back out? Should I stay? Should I no? Follow your rules. If you put a take profit and you put a stop loss, the market can only do two things. It can either hit your stop loss or hit your take profit. You guys just got to deal with it. Like, that's part of the game. Because when you guys start questioning yourself and start and not feel confident when you execute trades, guess what? You're not going to be successful traders. At the end of the day, you're not. Like, that's the reality. And if anyone's telling you differently, then they're not being truthfully. They're not. Because I started losing money when I was getting greedy. I was losing money when I wasn't following risk management. I started losing money when I wasn't disciplined and I was not following my rules. So that's why I was losing money. The moment that I followed all my rules, I became disciplined and I took the emotional part of trading. Guess what? I started making money, and I started making more than $1,000 a week, and that's on a bad week. So imagine on a good week what I'm doing. So, and there's a lot of, you know, education out there that can really get you to the next level that you guys want. But the best thing I can do for you guys, especially the beginners, even if you're not a beginner, please learn this. Learn Forex. Once you learn it, you master it, there's no job that you guys have right now that's going to come close to what you're making in Forex once you understand it. Because like I said, signals are cool, but if the person who's giving you signals dies or quits or doesn't want to do it, how are you going to pay your bills? How are you going to be like, you're going to be looking for the next guy to send you signals. And it's cool, don't get me wrong. I used them in the beginning and I still use them, you know, with my friends. We'll look at the market, we'll say, well, let's see where this is going. And it's pretty cool, but don't make that your number one source of income, relying on other people. You got to rely on yourself. So we're going to be going over risk management. I'm going to get up, going to go on the charts. And I think you guys are going to like this because I'm just going to retouch on risk management. All right, guys. So let me get up. The tables. Make sure you guys can see. Let me lift this up. Perfect. I'm so excited. So guys, for those of you that are on my YouTube channel, if you have questions, please write them in my, let me see if I can disable. Somebody told me that my chat was not was undisabled, and I just don't know to list how to showcase Q&A. Okay, it says disable. Okay, well, how do I undisable it? If any of you guys know how to disable this, what is this called? Then I can answer Q&A, but it's not, I don't know. If you guys have any suggestions how I can disable the chat, then you guys can be, you know, answer me questions on here as well. But I'm going to get on with risk management, okay? Risk management, okay? Okay, perfect. We're going to be going over lot sizes. So please, for those of you, I went over this. This is my first video, but a lot of people asked me, and I'm going to go over quickly about risk management, and then we're going to be going over some good stuff that you guys haven't seen before. So we're going to be going over. So 0.1, 10 cents per pip. 0.2. 0.20 cents per pip, 0.3, 0.05, 0.10, 0.20, 0.50, then $1. Okay, guys, so I'm going to be writing here. 0.3 signifies 30 cents per pip. Okay, so if it goes up 10 pips, then we know that is $3. So when people ask me, Kim, I won $3. Okay, well, what's your lot size? 0.03? Okay, well, you can calculate that. If every pip you win is 30 cents and you won $3, well, then you multiply that and then you know that you won 10 pips. All right? Now, 0.50 is 0.50 cents per pip. Okay? $1 per pip. $2 per pip. Okay? Make sure they can see real good.
Well, I can't tell because the board's in front of the TV.
Okay, they should see this. Okay. Per pip. And 50 cents for 50. Then we have here $10 per pip. This is what I see a lot of people trading off. Standard lot sizes. What are you doing? You don't have the account size to be trading that. You don't. I see people post it all the time. Like, guys, please, if you want to be successful, stop following the other fools that are trading on standard lot sizes that do not have the account to withstand a risk. This is not risk management. I'm not going to follow a guy that trades on a standard lot with a $500 account. You think I'm going to follow him? Because guess what? He's not going to be successful. You want to follow successful traders. And I'm not saying I'm the most successful trader because I'm not. I'm far from it. But what I do is I follow the successful traders. Okay? I don't follow the regular ones that you see all over Facebook posting crazy results that do not even make sense, but that's a different story. Okay, all the mentors I've ever had tell me never trade no more than 5% of your account. 5%. And that's still pushing it because there's other traders that tell you 2%, right? But if you want to be a little riskier, 5% should be your max in every trade you have, okay? So if you won, okay, let's see right here. Calculations, right? If you won 10 pips, okay, and it's 50 cents, well, every pip is 50 cents, right? So we can multiply that. So for every 2 pips, you won $1. So you multiply that, and that's going to be 0.50, calculator, 0.50 times 10, should be 5. Should be $5, correct? Just want to make sure. Yes, $5. Good. I was good. Now we're going to do the next one. So if you trade 0.50 cents per pip and you win 10 pips, right, times 10, that's $5. Okay? Now, if you do 0.10 cents, obviously every pip you win, it's $1 a pip. So if you win 10 pips, that's going to be $10. If you do $2 a pip, that goes to 20, right? And if you win $5 a pip, that is $50. And then the big one, I see everyone trading on the standard lot, it $100. So yeah, wow, 10 pips, $100 versus 10 pips and $5. Well, if you want to build your account to where you could start trading at this standard lot size, follow risk management, compound your profits, and then guess what? You could be trading at dollar standard lot size. It's one standard lot. Okay, now I'm going to be going over. So guys, if you guys are on, take a quick picture. For those of you that can't see, let's see if you guys are looking, join. Okay, make sure you guys are copying this. Oh, but you got.
Are you good? Because they can't tell.
So then, this is what you're gonna do.
What percentage normal risk for your account?
Hold on.
Some say 2, some say 3. Really, what's your preference?
Okay.
For me, Jennifer, it's 2%. I like to risk only 2% of my account. Kim, what risk per what?
I choose 5%. That's just me. I choose 5%. Melissa trades. She risks 2%. It's all preference. I choose 5% because I feel comfortable with my account to choose 5%. A beginner should choose between maybe 2 or 3%. And I'm gonna be showing you some other stuff right now. Now, pips, right? You won 10 pips, so 0, 8, 0, 0, right?
I like 2%. I love thank you. Me too. I don't like to risk my damn money.
2%. That's great, Jennifer. You want to be a smart? That's fine. That's perfect. 2% is fine. Now, say this is a trade we're getting into, right? 1.0800. I take the 5th number out. I know many of you guys know I don't do the 5th number. I don't round. So if it goes down 10, right? Minus 10. Then people think, well, is it 10 pips? Is it 1 pip? Is someone asking a question? No.
Yeah, me too.
All right, Anthony, that's good. So for every time it goes down, guys, for every time it goes down 1 number, that's 1 pip. It's 1 pip. Now, if you use the 5th number, then it's not. Then it's going to be 10 pips. It's going to be 10 pips, right? But I don't use the 5th number. I take away the 5th number. When I see it on the charts, I just take it away, and I use these 2 numbers. So if it goes up 10 or down 10, I know how many pips it's moving up because I don't like the 5th number. The 5th number confuses me. So that's how I trade. That's how I like to trade when it comes to these numbers. But everyone has their preference. Now, if someone has $100 account size, right? You should be trading
at a 2% risk.
0.1 to 0.2. That's the truth. Are you going to make much money? No. Are you going to see those crazy results you see on Facebook? No. That's the reality. You're not. That's the truth. If anyone tells you differently, then they're really risking at a way higher percentage level than 5%, or maybe they just don't care to blow their account. But I don't trade that way, okay? So if you had a $100 account, you can visualize at what lot size you should be trading. That's the truth. Now, if you have, say you start with $250, right? I would be trading 0.3 to 0.5, which is equivalent to 30 cents to 50 cents per pip. Per pip, guys, okay? And this is 10 cents to 20 cents per pip. Okay? If you have these accounts, if this is where you're starting your Forex account, this is what you should be trading with, guys. Now, say if you have $500, okay, I would be trading 0.5 still to 0.7, and that's pushing it, okay? That's 50 cents per pip, 50 to 70 cents per pip. But I would highly suggest to stay between 0.5 to 0.6, what we know is 60 cents per pip. If you want to push it a little, I see people do it, but be very careful. If you do at 0.7, make sure you have a tight stop loss in, and do not trade without a stop loss, because a lot of people wake up, oh, I fell asleep, and they wiped out their whole accounts. Do not do that. Always trade with a stop loss. You are not an expert to not be entering a trade without a stop loss, okay? And if anyone tells me that, I don't want to listen to them. I stay far away from their advice. Trust me, I do not listen to those type of people. That's just my opinion, and I'm not looking to blow my accounts, okay?
Again.
Again, should any of you?
Again, we've all blown our accounts.
That's right, we all have.
No. I have never blown my account.
Oh, you went down though a lot though.
I've been down, but I've come up. But
she took
never
chances.
blown my account.
She's taken chances.
She's been risky.
She's been risky. She's almost, but hasn't. But still, we want to teach you not to do the foolish mistakes we have done.
We have questions. Sasha wants to know, so what's your rationale for not going up to $1?
Well, $1, Sasha, really means $10 per pip. So, for example, if you have $1,000, right? We can do it right now. If you have $1,000,
do you put a stop profit?
Take profit.
Oh,
yes,
take profit. Yes,
you loss.
Yes.
You can put a take profit. I used to. I don't put a take profit anymore when I trade. I don't like to cap my loss. But yes, for beginners, I definitely suggest use the stop loss.
And if you can afford to watch it all day.
And to take profit. If you can afford to watch your trade, don't put a trade. Don't put a take profit. Watch your trade. Don't be greedy and get out when you see a sign to get out.
All right, guys. So for answer Sasha's question, I'm gonna answer your question, guys. Just hold on. If you have $1,000 lot size, $1,000 trading account, right? I told you, 0.5 to 0.6. 7 if you want to be at a higher risk, okay? That is 50 cents to 60 cents. That's per pip. Now, when you trade like $1 standard lot size, the correct way is for every 10,000, you should risk $1 standard lot, which is, it's not really $1, it's $10 a pip. And this is why when you trade with $1,000 and you trade, oh, I want to be brave. I see everyone doing a standard lot, one standard lot, right? Do you forget the spread? Once people look, oh, once you open a trade, oh, why am I in negative, Kim? Well, the broker has to take the pips. So depending on the spread, once you go into a trade, you're already starting in negative. I'm sure everyone has gotten to start trading. They see their account negative depending on the spread. So some brokers may take 2 to 5 pips. So if you're trading, for example, they take 5 pips, right? And you're trading a standard lot, you already entering, right, at negative $50. Because if it's 5 pips, for every pip represents $10. 5 times 10 is $50, right? That's how you guys understand why am I starting negative. Because the broker you use has a spread. And if you look at your spread, you're gonna know what currency pair, how much they're gonna take out as soon as you normally enter the trade, execute. Now, if you trade a standard lot on $1,000 account and you're already down $50, that's 5 pips, and you were to lose 10 pips, you're already down $150, okay? That's only 10 pips, and you're gonna be down $850? Is it really worth for 10 pips to you risk your account just so you can be down at $850? Imagine it goes down to 100 pips. What happens to your account? Goodbye.
Bye-bye.
I have seen the market makers go down more than 100 pips in 5 minutes. So what happens? You accidentally put a standard lot on $1,000 because you were ballsy, right? You go to the bathroom, you go to pee, you come back down. Oh my God, my account is blown. Well, why? Why is your account blown? Well, you were not trading at the risk management we told you, $1. That's way too high. Do people do it? Yes. Can you win? Yes. But there's more. You're going to have a higher risk of losing than winning. Even if you say you know the trade, you know it. You're not God. You don't know everything. Okay? You're not Houdini over here. So don't come here and tell me you're Houdini and you can trade $1 lot on $1,000 account. Okay? You're not Houdini. And if
I have well over $1,000 account, and I never, ever trade a standard lot. Ever.
Okay, so this is basic risk management. Can I go in depth? I can do a whole video tutorial on risk management because that's one of my favorite parts because I feel so bad. You gonna write the homework when I go over? So, you're laughing, Sasha. Good. You're not gonna be laughing if you blow your account.
Somebody asked a question, and I think it was, so for every $100 you trade a micro lot?
Yes. Yes, you could. I gave the ranges, guys, so it's pretty there. It's there.
Yeah, so risk one micro lot for every $100 in your account.
Yes, it's more or less. I wrote down the numbers, so it could depend. If you have $500, then you can go to 5 to 7. So you could range. Remember, 5 to 6. You do have an option, so it's gonna be a little more than just 1 per 100.
Yeah.
Okay. But you can use that method for you if you feel comfortable. Absolutely. Now, for those of you that are watching me, we're going to go over some cool stuff I'm excited to share with you. Like I mentioned earlier, I had a good friend of mine that, shared some stuff, and I can't wait to share with you guys. So I'm going to share my screen, and I hope you guys are enjoying this session like I'm enjoying it. And I'm going to go to share my desktop. All right. Okay. I hope you guys are enjoying the session because it's going to get good. Melissa's going to be writing the homework, and I'm going to be going over some cool stuff. Now this is when you have to stand.
Are you in?
Okay. All right, guys. So now you're looking like, what the hell is this, right? Okay. Now, this is AUDJPY. I'm on a 1-hour chart, okay? Make sure you zoom in so they can see.
Yeah, they can see right
Yes.
there. Hold on. You see there? AUDJPY on the 1 hour.
You would think people have common sense. Yeah, sometimes they don't. Who is it? Let me see the comment. JP Income. You would think people have common sense. All right, so now these are zigzags. All right, guys, these are zigzags, okay? You're going to find them where it says your indicators. See? It's under stochastics. You have zigzags over here. Now, these are stochastics, right? You see them right here? Now, I drew a trend line here. You're going to see this trend line, right? Well, why is she drawing a trend line on the indicator, right? People are like, well, why? Well, because I use this indicator just to visualize what's happening up here, right, with my charts. So I drew this indicator here because it just gives me better direction when execution for a buy or sell to see if it coincides with my chart, with my candlesticks versus here. So look at this like this, right? If you want to be safe, you see this trend line here? Once it passes my trend line and I have confirmation up here, I know to go in for a sell. So when it passes my mid-trend line, right, because just because it's going up, you just don't jump in because you see the indicator, the stochastics telling you it's going to go up, because it can go up right here and then break and come right back down. So what would happen then? Then you would lose, right? So I always like going midway. So if it's going up and it passes my trend line and this coincides, then I'm like, okay, well, this is indication that this is a good buy, right? Because you're getting the indication after it passes your trend line, it breaks your trend line. You see the indication here to go in as a buy. And then you get your other indicators right here, which I have my zigzags, which paints a better picture for the highs and the higher lows and the lower lows and the lower highs, right? And this right here is telling me to go in as a buy. So is my indicator, the stochastics, right? So I make my zigzags white. Okay, so you click here where it says zigzag, right? I'm going to show you. You're going to go to colors, and you would just paint them, you know, click the color you want. It's red because this is a different one, but this is white. You can just type in white and the width to make it thicker. So I'm just canceling because I'm not going to change it because I already did. So as you can see here, I drew a trend line right here. Look at this trend line, okay? Look at this trend line. Now, I want you to see these trend lines right here. There are two trend lines, like a channel, right? How do you find this trend line? How do you find these? Well, easy. You can go right here where it says the E right here, and it's going to give you a channel, but two. It's going to give you two channels. Click right here, or you can draw them yourself with a trend line. This just is a little more accurate, but I do both. I draw my trend lines, or I use this one. So you guys follow me for the ones on YouTube. Either I can use this one that makes it in two, like this, or you can draw your trend line and just gives you one, like this long one right here. Now, look at this trend line that I drew right here. Look what happened. It hit here, boom, bounced up. Remember, like a basketball, right? It hits, so resistance, support, like a basketball. What comes up must come down, right? If this goes up, it comes down, right? If this goes up, what happens? It goes down. So remember, what goes up must come down. Up and down, up and down. This is like preschool, but you know what? Keep thinking up and down. Kim said up and down, up and down. So what happens here? It hit here, bounced off, okay? Consolidated here, dropped down here, hit again, right? It tried to hit again. Look at this. Again, then it consolidated and boom, it bounced here. And what happened, guys? What happens? All right. What happens here? It bounced off here, and guess what? It broke my trend line. It tries to break resistance, right? This is my resistance line, right? This is my support. This is my resistance. This is just a trend line. But what happened here? It tried. The buyers tried to push up. You see this long wick right here? The buyers tried to push up, but they closed. They weren't successful. They closed here, right? So it did not. So I waited for my next candlestick, right? Because I'm not going to go in as a buy if this broke my resistance and closed right here. That's not confirmation. Even if we broke this trend line, guys, you still want to wait for confirmation. The next candlestick, the sellers, they had a long wick, right? You see this long wick right here? They were indecisive, right? That shows you that the candlestick was a long wick, indecisive. And guess what? The buyers try to push, the sellers try to push down, and they weren't successful, right? So what happens here? So I have a trend line here. And I'm saying to myself, okay, it didn't break my resistance, right? It didn't follow the pattern to go up. It came back down. This is how the market makers will get you. People see this going here. Oh my God, I'm going as a buy. And guess what? They fake you out here. They faked you out here. So now I have the next candlestick, right? It pushed up, right? Push up, broke my resistance. The next candlestick, guess what? It broke. But did it follow the trend? No, it did not. It went right back down, and this is another fake out. People would think to go in here as a buy, not knowing that, guess what, guys? It went right back down, okay? So right now is really just consolidating. So what I'm waiting for now is two things. To break my trend line here. It's about to end. Okay, guys, I have, all right, guys, I have less than 2 minutes on this Facebook Live, so I'm going to start another one. So, because you know these Facebook Lives are only 30 minutes long. So these are my options. I'm waiting for it to break my trend line, break my support, right? Wait for confirmation for another candlestick to retest, and then I will go in as a sell. Now, this is going to take time. This is why I drew my trend lines and my support and my resistance to see where the market is going to go. Now, if it breaks my resistance, right? Look, a new candlestick just opened, right? You see that? Just opened.
What is that, guys?
Well, it's not going to be a doji yet because it's just opening. Yeah. So we can't confirm that as a doji until it closes. The next, because this is an hour candlestick. So since it just opened, we can't confirm anything now. So If this goes in the other opposite direction, it breaks my resistance, and then it follows another candlestick, I will wait for 2 candlesticks before I execute a buy. Okay, guys? So we're just watching right now AUD JPY to see where it goes in what direction, okay? So this is how I draw my zigzags. You see it right here, indicators. I showed you how to add it. I showed you how to change the color. I showed you how to add the thickness, right? Now, we're going to go over,
Someone says, Kim, can you do supply and demand zone? It's about to end in a few seconds.
We can do a lesson on supply and demand.
We're going to do a lesson on that, and that's going to be on for our next week's session. So we're going to put it on here. So guys, this session is going to end in 20 seconds. So I'm going to make sure that for you that are watching me on my Facebook Live to go on again. So this is going to end. So thank you guys. And I'm going to go over what's these colors, right? Everyone's like, oh my God, what's up here? What's these colors? It's some good stuff, guys. So take care. So you guys make sure you come back on so I can go over what's this stuff right now. Bye. All right, guys, let me just end this video for them. Okay, and this. Okay, let me go back live. Okay, so hold it again. All right, guys. So some of you guys are looking at this and like asking me, well, what is this? Well, a great friend of mine, you know, was going over some stuff with me, and they're like, all right, so what do these colors mean, right? Well, the green represents the Asian session, okay? The red represents the London session, and the blue represents the New York session. So how cool is this, guys, right? So you know, oh, and this. What are these white lines right here? Well, each line represents a day. So this represents the 22nd, right? This represents the 25th, the 26th, the 27th, the 28th, the 29th. Okay, guys? The 29th, and then we have February 1st right here, where the market just opened, right? Now, how can I add this, Kim, right? How can I add these white lines? And this is basically shows you where the market was for the whole day, right? Isn't this pretty cool, guys? I've never done this before. And if you look at the bottom, the white line ends until the next day starts, the 25th. So look how cool this is, guys. This is something new. I hope you guys are enjoying these white lines because they just break the days for you, for those of you on my YouTubers. So now, right here, the green overlaps the London session. So this is a great time to trade when 2 sessions are overlapping each other. So look how cool this is, okay? So it's overlapping. And now this tells you when the London and the New York session overlaps, right? You have 2 sessions here overlapping each other, and that's from 8 to 12. So that's a really good time to trade. And that just shows you here the next day when the Asian is overlapping with the London session, the London overlapping with the US session. So this is just gives you an idea when the 2 sessions are overlapping, and basically tells you what currencies to trade for the Asian session, what sessions to trade for the New York session, London session, the New York session. So this is pretty cool, guys. This is a trend line that we have here. And this is showing you where we're reaching for, where this was my support for this. And I'm going to show you something cool here. And I hope you guys are paying attention. So right now, we're in the Asian session currently. See the green? Right now, just open. We're currently in the what time frames are you using for that indicator? This is not an indicator. This is something that you have to buy and pay for, Anthony. This is just showing you the overlaps of the sessions with the colors. So this is not an indicator. This is just something that, I got through a friend that I paid for. And
you're on the hour chart.
But I'm on the hour chart right now on the Euro USD, guys. So go on. Then hold it so they can see.
I did. I put it up.
Euro USD. Now look at this. These are more trend lines. So I drew a trend line here. It hit here, boom. It hit here, boom. What happens? The third time it hit, right? Faked you out a little here, but guess what? It broke here. So remember Friday morning that everyone's like, oh my God, who caught that euro drop? Who caught that euro drop? Well, guess what, guys? Every single one of you guys on this session should have caught it. Why? Because if you drew the trend lines, you knew that this is your support, this is your resistance, and this is your trend line here, right? If it broke, this is a crossover right here. It broke support and it broke my trend line here, right? It broke. It hit once, hit twice, hit three, and it broke. So this indicates twice. You have two indications that is going to drop.
We have a question here. How can we set up the white brackets on our chart to break up the days as you have?
Okay, this is how you're going to do it. Command and Y. Hold down Command and Y. Command and Y. And that's how you're going to break up the days on your chart, guys. It's really going to help you. Okay, catchings. So right here.
Shaquille.
Oh, I said his last name. Catchings, if that is his last name. So look, guys. If nobody made money on that drop on Friday morning, shame on you guys, because that means you weren't putting your trend lines. And if you put your trend lines, like I said, you're supposed to monitor the market, right? It broke right here. I would have gotten midway. I told you. After these crossed over, I would have gotten in here. And let's see how much, okay? Would have gotten in here. Would have made money. Hold on, guys. It would have gotten out here. Look, guys would have made close to 73 pips, guys. 73 pips, nuggets, right? Yeah, a lot of people. I've never seen anyone really break the days up so you can see where your low and the high was for the day, just literally by breaking up like this. So I have my trend line here because obviously I wanted to see when it was gonna bounce off, and then I have a channel trend line coming down here to see if it was going to break down, and it did. And a lot of people made a lot of money on Friday. So whoever you guys did not make money, well, then you guys are not really honestly following what we're saying, because draw trend lines, draw channels, because look how easy. Oh my God, boom. What did they say? Once, twice, 3 times it broke. Then sometimes you wait for the fourth, and look, it broke here. It broke this support. It broke this resistance. And that is confirmation for you guys. And look, another confirmation right here. Inverted. The inverted hammer right here.
Yeah.
Look at that, guys. The inverted hammer. You have confirmation. Boom. If you didn't make money, shame on you. So I want to make sure when you guys are done with this session, draw your trend lines, because this is where the market is right now. So it's going up here, okay, right now. So we're going to see where it goes. Is it going to come down and break my support right here? Is it going to break support and break my trend line and start a newer low? Or is it going to go up, break my resistance line here, and I'm going to draw another trend line here? And we can actually just draw one right now, right? You guys like live trading, right? So let's just draw this trend line right here. Let me lower it right here. Hold on. All right. Right there. So let's see where it goes. I don't like how it's out right here. Right here. So we're going to see where the market goes, guys. Look at this. I always draw trend lines every day on my chart so I can use it as a visualization on where the market is going. All right, Anthony, you make sure you go kill it this week. So for those of you that missed this, shame on you. For those that didn't get on, but for those of you who went on, know that I gave some amazing nuggets. Alba gave some nuggets. Melissa gave amazing nuggets. We all did. So we all gave you something you've never seen before on any of our sessions. For those of you who missed it, make sure you draw your trend lines and all the currency pairs so you can see where the market is going, guys. So right now, the session is over. We've been way more than an hour, and we're going to give you homework. Woo-hoo. The homework is due next Sunday. We're not going to do a webinar on Tuesday. Okay, we're not going to be doing it on Tuesday. Basics never hurt. Absolutely not, because off of basics, I make a lot of money. So, you know, just imagine when we become experts. Thank you, ladies. I love you, Sasha. We love you. See, make sure you come over to my house this week. We need to get up. Gotta teach you how to catch some pips with us. So, guys, Melissa drew the homework, so we're going to.
I drew the homework.
She wrote the homework out. I'm sorry, guys.
I didn't draw your homework.
That's fine. Sorry. So let's stop the sharing feed, and I want you guys to take down the homework. For those of you that are on here, make sure you write this homework, because pretty soon, if you don't do your homework, you're not going to be watching our webinars no more. So this is going to get serious, guys. I really want people to start doing their homework assignments. If not, then there's no point of being part of the session if you guys are not even serious about this.
Okay, guys. So homework assignment number 1. How do you identify a reversal? Okay, that one's not extremely hard. Number 2, name the different types of breakouts. Something we'll go over next week. Number 3, how do you fade a breakout? Okay? And number 4, I want you guys to place 5 trades on your demo accounts. I want you to submit the currency pair, the time you entered the trade, the time you closed the trade, what was your entry, your stop, and your take profit. And I want you to write an explanation on why you took that trade, because we've told you guys time and time again,
Make sure you
you
snapshot
need
this,
to
guys.
understand why you got into a trade. I can tell you right now, sell the Euro USD. But if you don't know why I'm telling you to sell the Euro USD, if you don't look into the chart and see why I'm telling you to sell the Euro USD, then you should not be taking the trade. I've told you guys this a million times. You need to be able to understand why you're taking a trade. It's important to learn to read your chart. Okay, so really quickly, how to identify reversal? Name the different types of breakouts. How do you fade a breakout? And
So you guys are writing this.
demo trades on your demo accounts. I need the currency pair. Time you entered the trade, time you exited the trade, your entry point, your stop loss, and your take profit. And why did you take the trade? I need a reason why you took the trade, okay? And I don't want 5-word descriptions on why you took the trade. I want a valid reason as to why you took that trade. I want to look at the chart and understand why you took that trade. Okay, guys?
So let's get ready to let's hold this. All right, guys. So I hope you guys wrote the homework out. This was an amazing session. I hope you guys tuned in. Please make sure you guys write the homework. Take care. This is the Forex Chicks. You want to say anything, Melissa? Bye.
Bye, guys. I hope you enjoyed the webinar tonight.
Alba.
Hey guys, thank you for having me.
All right. We love you guys. Stay soon. Bye.
Stay soon. Bye.
Say take care. All right, guys. So like I said, we're so glad that you guys stayed in. Please make sure you do the homework assignment, send it in. If you guys, pretty soon, we're going to be having private webinars. So if you don't hand in your assignments, you're not going to have access to these webinars. And if you think what we did this week was amazing, we have even better plans and better stuff that we're going to show you that I bet you guys never seen. So stay tuned. Take care for enjoying us, and we'll be back up next Sunday at 9 p.m. Take care. This is the Forex Chicks.
Bye, guys.